Hello and welcome to the August 2024 Houston real estate market update. So I know that it's mid-September, but the numbers come out around the 11th of the month. And I also wanted to wait to see what was happening with the Fed rate cut. So now that that's happened, we have a whole lot to talk about. So let's get started. So in August 2024, the Houston housing market saw a lot of changes with a slowdown in sales activity, but an increase in inventory. So let's take a look at the numbers. Single-family home sales across the greater Houston area fell by 8.3% compared to last year. So specifically, last year we had just over 8,000 homes sold in August, and this year we had 7,340. So we definitely saw a slowdown, and it's the fourth consecutive month of year-over-year sales declines. But prices have stayed pretty stable, so they have gone up just slightly, 0.9%. So that just indicates that we do have a very steady market despite having a large drop in the sales number. The total property sales for August were down 11.2%, and the total volume was 8.8% down. But the inventory saw a huge increase. So you can see here the active listings on the market. Last year we had 37,735. This year we have just under 49,000. So that means that's a 29% increase in active listings. So that pushed the month of inventory, which is 4.5 months now. So that has gone up a lot. It was 3.2 months. And what that means is that if nothing else were going to come to the market, it would take 4.5 months to sell everything that's already there. So having a huge influx in inventory definitely means it's going to take longer to sell everything that's there. So that is, you can see they're relational. So now that we have all this inventory and prices are steady and things are slowing, it's a really good opportunity for buyers because there's a lot more competition. So interestingly enough, the luxury market saw, let me show you that one. Here we go. It breaks it down by band. So the luxury market was the only market that only segment that saw increase in sales. So for everything $1 million and above, the sales increased 2%. Everything else saw decrease in sales. And of course, that is mostly because if you can afford a luxury home, you're likely less affected by the interest rates and the economy. Now, the pending sales, let's go back to that. The pending sales show all the homes under contract. So we did have quite a big uptick from last year. So it's up 12.5%, which means that things are moving and likely we're going to see more closings in September when we get those numbers. So what does all of this tell us? Well, Houston's market is cooling off after years of rapid growth. You remember 2022, the COVID time where there were multiple offers, lines at the door. It was craziness. So things are kind of steadying out, but the prices are holding pretty steady, which is really very reassuring. And inventory is expanding tremendously. So all of that means there are more opportunities for buyers. So you've probably heard a lot of realtors and lenders saying now is the time to buy. Well, the data is also indicating that. So it is a good time to buy. Prices are steady. Homes are on the market longer. There are more choices than there were a couple years ago. So it is a very good time to buy. Sellers are a little bit more aware of the market and are willing to make some concessions. So now let's talk about the Fed fund rate that just got announced a couple days ago. So the Federal Reserve just reduced the Fed funds rates. They have started the easing cycle, bringing the Fed rates down over the next 1 to 2 years, which in turn will bring the mortgage rates down. One thing to note, the mortgage market, which is driven by the bond market, and are always ahead of the policymakers. So the mortgage market's been expecting this, so they've been slowly reducing their mortgage rates in anticipation of this reduction. But we should continue to keep seeing that as they're expecting the Fed to continue to bring the rates down over time. And the mortgage market will continue to stay on top of that. So we should see a continuous creeping down of the rates over the next 12 to 24 months. So that's even better news for buyers because lower interest rates means bigger purchasing power. So the expectation is that as rates continue to decline, buyers will come back out and suddenly prices may take a big jump. So why not get ahead of that? If I was looking to buy, I would do just that. So I hope you found this helpful. If you have any follow-up questions, please message me. And if you're ready to dust off that pre-approval letter, let's get to work.